A day late and 37 cents short. Hi, this is Dean Jenkins with FollowMeTrades.com, and this is the weekly update for the market for the week ending January 6, 2017. And the Dow Industrial Average just can't seem to hit this historic and emotional milestone of $20,000. It missed it today by 37 cents. You know, close counts in hand grenades and horseshoes, but not in the stock market. But let's have some context here. Let's switch over real quick and just look for a moment at a little bit bigger time frame. So I've switched over to a weekly chart on the Dow Industrials here. And if we look back at the very low after the financial crash of 2007, 2008, the Dow low on March 6, 2009 was 64.69, right down here. The market has tripled since then. It's gone up 300% over nearly 8 years. So by anybody's definition, that's been an amazing, epic bull market. So I think the really important question going forward is not whether the Dow is going to hit 20,000. It very well may. It probably will in the very near term hit 20,000. The real question is, are we going to see meaningful continuation of this trend, or are we going to get a correction pretty soon? So history and technical analysis is leaning very strongly toward a correction. After this amazing 8-year bull run, we're definitely losing momentum. You can see it's not the straight up move. It's consolidating. Even with this last little push here, we're primed and ready for a correction. So will it push up through 20,000? More than likely we'll hit that number. But that's an emotional number, and again, history and technical analysis is showing us that we're pretty due for a pretty good correction, and the corrections happen historically much faster than the rises. So you look back at the crash, the financial crisis move. We lost a tremendous amount of market value over a relatively short period compared to the previous run-ups. That's been the market cycle for years. So those who were prepared, those who are informed, when, not if, but when the next correction happens, and it can't be that far off in the future, those who are prepared, those who are informed, they're gonna profit very handsomely. It goes down faster and it goes up, and given the length and the magnitude of this run, the next pullback is probably going to have some real magnitude as well. Not a catastrophe, not the end of the world, just a normal part of the ongoing market cycle. So we don't have evidence that it's beginning yet. We have pretty clear evidence that it will happen, not that it has started yet by any means. But when we do get that evidence, I'm watching like a hawk, and I'll be providing those updates. And those who are prepared, those who are informed, are going to profit really, really nicely from it. So for now, we wait, we watch. When Dow hits 20,000, if and when it hits it, which is pretty likely, put on your party hat, blow a horn, celebrate. That's a big deal. And then let's be prepared for how we're really going to trade the realities of the market as they play out over time. And again, history and technical analysis is leaning towards a pretty substantial correction coming pretty soon, and that's going to be very profitable for those who are participating in it. So that's the look at the indexes. Let's switch over to gold real quick and take a look at gold. Gold's really interesting. So here's the daily chart of the gold futures market, and it seriously looks like it's put in a bottom and it's heading up. We were able to trade this week in my short-term stock pick service. We were in a trade about 3 days in the gold miners ETF. We made about 40% profit trading an option contract on that. It was really nice. If you'd like to participate in those, there's a link, and you can check that out, find out more about that service, and jump in and trade with us. Gold, again, looks like it's put in a bottom and is getting ready to begin its recovery. and there will be plenty of trades, and we'll be calling those out and taking them as this rally forms and continues, which it looks highly likely like it will. Here's the oil futures contract. Oil just wants to get this rally going, and it's having a little trouble. Oil's volatile. It's a beast. It's wild. But you know, in the bigger picture, we declined from over $120 a barrel last year, found a bottom, started coming up, pulled back over the summer, and it's really trying to get a rally going. The key level to watch here on oil is 56.27 currently. That's this previous high put in last summer. If we can go through that level with some momentum, then we're heading up to some pretty nice highs on oil. Let me show you on a different time frame. Here it is on the weekly chart, and just a recovery from that big drop would take us up probably into the 70s to 80s is the high probability area. But we got to clear this last high here and really prove that this recovery in oil is going, probably dependent on the OPEC, non-OPEC agreements to cut production, draw down reserves, you know, and get prices rising. And once it takes off, it could be really, really good. We just need to see that proven. We are waiting, we're watching, and we will continue to give updates on that. That's highly likely, but it's not completely proven yet. So we just got to stay tuned and wait for this breakout to happen. And then if it does, there it goes. Well, that's the update for this week. Dow 20,000, big celebration. It's an important milestone. We've had an amazing bull run, but let's get ready to trade the correction when and if it proves itself. You know, really not if, but when it proves itself. Let's be ready and let's trade that. Gold's showing some good signs of heading up. There's some good trades there we've taken already and more to come, and we're just waiting for this breakout on oil. Stay tuned, use risk control, trade safe, and we'll catch you on the next update. Thanks.